All right, guys. What is going on? Do you want to see a dead body? Do y'all want to see a dead body? Drop a 1 in the chat, man. Drop a 1 in the chat if you want to see a dead body. There's a lot we have to discuss. I do not know where to start. I don't know where to start. There's so many aspects to this. There's so many things to cover. And it really reminds, like today reminds me of that question that one of you guys asked yesterday about learning too much. Is there such thing as learning too much or something like that? And I said, yeah, it's definitely possible, because you don't need 100,000 things. You know, you don't need 100 tools and stuff like that. You know, every concept isn't utilized, you know, every day, basically. So you got me sort of wanting to be a little bit more conservative today, but again, there's so much that goes into this. There's so much that goes into elite level precision that I can only simplify things so much. You know what I mean? There's only so much you can simplify. G, Slowly, Scott, Capitalist, Eberneth, Gavin, Akil, Yuso, Jesse, Mo, Jorks, Victor, Akinola, welcome back. A few of you, welcome back. It's been a minute since I've seen your name in our chat. Glad to have you. Glad to have you. Slowly, and anybody else that I might have missed. Felix, what's good? What's good? So yeah, in the Discord earlier, I did say to basically bring your notebooks, bring your pen and paper. It's that kind of day. Most of the streams are, but today is definitely going to be one of those pen and paper kind of days, not field notes kind of days. Notepad, notebook, or legal pad sort of day. Fun fact, John Maxwell actually writes his books on legal pads. I didn't know that till I met him last year in December. Because he, like, during that speech, he was talking about how he was on vacation and he wrote, I think, How to Get a Return on Failure, which I read earlier this year, by the way. It was a pretty good one. And he wrote that on a legal pad. I was actually a little bit shocked. Just a little bit, though. I was like, that's crazy to me, but you're like 70-something years old, so maybe that's not so shocking. That ladder analogy was fire. Thank you. I made that up on the spot. So, hopefully you can appreciate that. Was good, Francis. All right, you guys ready? You dropped a 4. Get out of my chat. Get out of my chat. We got a few more people on here, so drop a 1 if you guys want to see a dead body today. If y'all want to see an absolute slaughterhouse. Now, I did post the entries and exits on Discord, so I'm gonna keep that there. And for everyone else, I will at least show you and tell you about what transpired today. And maybe you'll learn something, maybe you won't. We shall see. And that's a great point, Felix. I'm definitely going over that. And that's one thing, that's another reason why I decided to share that today. You saw me go 1 and 1, right? Basically 1 for 2. 1 loss and then 1 win. 50% win rate today, Chad. Garbage. Absolute trash win rate. But that's only 2. That's not enough for a sample size. And when your wins outweigh your losses, that's fine. So I won't talk too much about money management. I would much rather go over the charts. There was so many tweets today. Finally decided to just hop back on Twitter, see if I still got it. You know, see if I still got it. Or sorry, see if the 8-ball still has it. The Hot Wheels 8-ball. You know, it's not me, obviously. Yeah, Joey, unfollow, unsubscribe, cancel your membership. Don't have a 100% win rate. Yeah. Everybody on Twitter that does though, so I'm sure you can find some mentors over there. What's good, Adrian? Jorks said, I traded this market maker buy model today, but to be honest, my TP was equities open high because on Friday we took equities open and melted from there. LOL. So I scared out today. Fair enough. And did not hold for these equal highs. Well, I don't blame you, my friend. I don't blame you. And one thing about psychology is that, yes, it can be difficult when you have stuff like that in the back of your mind. What's good, H? Now, the thing about that, and I've said this before, and I'll say it again before we get into the details for today. I want to say this before we get in here. Do not, okay, Torty, Lewis, right, and everybody else, do not bring old trades with you to your next one. Okay? Do you guys remember the coin flip exercise? Drop a 2 in the chat if you guys remember that. The coin flip exercise, it was very simple. You took a coin, maybe a quarter, and you flipped it. Sometimes it's heads, sometimes it's tails, but you won't really see consistency in trying to predict whether it's going to be heads or tails, because you really don't know. Now, you could say, oh, well, it's been heads like 3 times in a row, so it's got to be tails now. Bang, you get a 4th heads. I believe that's called the gambler's fallacy. You might have to double check that, but I'm pretty sure that's the gambler's fallacy. You can look this up, by the way. The gambler's fallacy is the false belief that past random events change the probability of future independent events. It occurs when people assume that short streaks must self-correct, such as thinking tails do after a coin lands on heads 5 times in a row. Well, I nailed that. I actually nailed that pretty nicely. Thank you, AI Overview on Google. We appreciate it. I hit the nail on the head, but all right. Anyway, so that's the gambler's fallacy. So I point that out to you because even with what you saw today, you saw me, I think it was here. I had longed here, somewhere in here, and that low was taken. So I took a loss. Oh, wow. John Phibb took a loss. Yes. I've said that for a long time, guys. I do not have 100% win rate, strike rate. It's not 100%. Okay? And so that's what you saw. Loss. Now, and I'm not going to show you my journal today, but I will tell you what's in there. When I got stopped out, I wrote a lot. I wrote like almost 2 pages as this whole thing was going on. And so when I wrote, I was stopped out, small, stop loss hit, whatever. And I said the stop loss that hit formed the 1, 2, 3 formation low. Now, I don't think I included all of the markups in a screenshot. Obviously, I wanted to save that for YouTube and probably the market review tonight too. But what I got wrong, it's okay to be wrong, Chad. Seriously, it's okay to be wrong. I'm a goober sometimes too. It's all right. It's not a big deal. Drawdown's not a dirty word, and being wrong is not terrible. It's not bad. That's just your ego talking. Trust me, I know. So back before all the beautiful stuff we're going to look here in a minute, before all of that, this is the information that, you know, I'm basically working with. We still have all this up here. Beautiful consolidation, left it, back into it, left it again, bearish until manipulation. So we ended up making this terrible low during the first 20 minutes of the day. Then, I know it's a little bit hard to see, but right here, right around the hour of 9 o'clock, we had this lower low here. Shift in a steady delivery there. And I figured that was enough for a low risk buy. And to me, it was. That to me seemed like the low risk buy. And I want to say that ES was higher at this point. From 847 down to 859. I do believe that ES was higher. 847 to 859. So there it is. Bang. So you have a higher ES. You have a lower NQ, even the wickage, right? Shift in a steady delivery. So that to me, again, that seemed, Felix, that seemed like the low risk buy. Now that's good, Cameron. And I know some of you were looking for shorts. There's nothing wrong with that. Yeah. Moving on. So yes, I looked at that because this is basically what we're looking at before everything else printed is this, like basically right in here. So it's like, okay, there's our low risk buy. Or so it seems. Right? And that's why it's called, I did not create the low risk buy. That was not me. That was taught to me. Now the low risk buy, if you think about it, hence the name, right? It is supposed to be low risk. And when you're catching reversals, when you're catching either the soup or the low risk buy, you are going to get very, very good RR. And yeah, Cameron, I know exactly what you're talking about. I'm just trying to go in order here because I don't want to be I don't want to be all over the place. I want to have this as a recording that people can come back to later on. But this is what happened, right? Nice, roughly 1 to 5 if you include London's high, it's a little bit more, somewhere up here, and that's worth it to me. It's a low risk buy. We had a divergence. We have good RR. There's nothing wrong with that. I appreciate that, Cameron. Thank you. Thank you. So yes, bang. That was stopped out. Not immediately. It looked good at first, and I didn't want to go break even because I didn't want to choke the trade. I could have, but I was like, nah, I'm not going to do it. So we come down, bang, I get stopped out. Okay. No worries. Reevaluate. Excuse me. We're on a 1 minute time frame. So I'm looking at charts. I'm looking at Dow very briefly, if at all, like hardly. And I'm looking over at ES. And again, we have a phenomenon where ES is not going lower. And I did mention that in our Discord today when I said, hey, ES left equal highs. I wonder, you know, if Thursday's low is on the table, like sweep Thursday's low and then jam for the highs. That's kind of what I was hinting at. So because we did not get that, because we went higher instead, right? This is hard to explain, but the essence of it is this stuff is binary. Okay? This stuff is binary. If this, then that. If not this, then that. So let me try and explain that. The thinking is, okay, we left behind equal highs. We are coming back for that. May not be today. It may not be the next 20 minutes. I don't know. But in my mind, I see equal highs. I'm like, okay, the market's coming back for that. So my default is, yeah, okay, run it lower, grab Thursday's low, get a V-shaped reversal, whatever, maybe a small time frame buy model, and then you can trade that, like trade on the way towards those equal highs. That's beautiful. right? So the if is Thursday's low, then equal highs. Does that make sense? If Thursday's low, I don't have enough room on my screen, chat. If Thursday's low, then equal highs, right? If we don't get Thursday's low and we just trade straight to the highs, that's fine. If I'm wrong in that assumption, there's nothing wrong with that because I'm not even trading ES anyway. But being wrong actually gives me insight. What insight does that tell me? Well, if ES is refusing to go lower, but NQ is going lower, remember the 1, 2, 3 here. Most of you know your ABCs, your 1, 2, 3s, right? 1, 2, 3. So we have a situation where, again, ES is higher and NQ is lower. So immediately that 1, 2, 3 formation, that is now the manipulation phase of the buy model. I thought it was going to be that. I got it wrong. I got it wrong. We get that. That ends up being the manipulation phase. So once we have the manipulation phase, what occurs after that? Some of you might be new. Some of you may not be familiar with my work or the things that I teach yet, at least. But this is a framework. This is called a market maker buy model. The title of today's stream is In-Depth Look at the Market Maker Model Framework. Technically the buy model we're going over today. The Market Maker Buy Model Framework. Equal low or equal highs, equal highs, original consolidation, distribution, redistribution, manipulation. Okay? After manipulation is your low risk buy, your first leg and your second leg of accumulation. So drop a 3 if you guys are with me so far. Ask a question if you have it, but I just want to pause just to make sure before I continue that we're all good to go. We talked about the lows. We talked about getting stopped out. We talked about the 1, 2, 3 formation. Now we understand, okay, I got it wrong. 1, 2, 3 formation. Now that we have that, now we can start looking for longs. Now we can start looking for re-entries. Thank you, Felix. Now we can start looking for re-entries. So, what are the details now? And this is where, the ego might come out a little bit. And I don't know what to tell you. It is what it is. But I will share every tweet from today. And I'll put it in the chat. It's in the Discord. You guys are welcome to look at it. And this is actually a very, very great study tool. I don't do this often, but I decided to do it today. I wanted to see if I still had it, right? Or what did I say earlier? The 8 ball. I wanted to see if the 8 ball still had it today. So the first tweet for today was not down here. It was actually here. Now think about this for a second. No, I did not tweet beforehand. This one is, and we'll get to that. But think about what I had told you here. Propulsion, low-hanging fruit here. Low-hanging fruit, there should have been dash. That should have been like a low tag, hanging tag fruit here, but this is an English class and I'm a seller, not a speller anyway, so it's fine. But the low-hanging fruit, I think I have told you guys time and time and time again. Remind me, Joey. Remind me if we can get to the 20, 40, 60 day look back. But otherwise, I don't teach it because I don't use it, is the thing, Joey. But I know what you're talking about. The low-hanging fruit is always going to be either the most immediate high or like the earliest set of equal highs or low resistant highs. Okay? It's the low hanging fruit. If the market has been trading lower and lower and lower and lower, anybody who has been short, Cameron, anybody else who has been short during this 400 point move lower, that's great. Anyone who's short has open profit or unrealized gains. And a lot of those stops are going to go where? Well, the market made a lower low, right? What's the trend? The trend is our friend, right? The trend is your friend until the end, right? And then it stabs you in the back, Julius Caesar style. All the stops go to recent highs. That's why that is a low-hanging fruit objective. That's a hint at, hey, wink, wink, that's a partial. All right? Now, let's get into a little bit more details, the actual entries and concepts and stuff like that. Okay? When I said propulsion, that means if you traded anywhere long in here, because there's more than just the propulsion, obviously. When you have a market maker model, every entry model pans out. Okay? I didn't plan on throwing that gem in here today, but I told you to bring a pen and pad, so you might as well fill it out. And most of you probably won't. But there you have it. In a market maker model, every entry model pans out or will be offered. So don't say I never gave you a lot of value. Your shift in the state of delivery, which if you also looked at my Instagram or if you looked at actual videos on my YouTube channel here, you saw that this is the free beginner trading model. It's what? Waiting for or allowing equal highs to form, waiting for manipulation, and it's the first shift in the state of delivery. That's the model. A free model that I gave out. Literally too easy. Okay? So that right there is the low risk buy. That, okay, we trade through at 921. Right here at 922, that is the low risk buy. That's not a propulsion. This down candle here, that is the propulsion. Okay? Down candle, shift in the state of delivery. When we trade back down into it and we get through it again, that second one, that is the propulsion. Look at all these bodies in here. Okay? Look at all those bodies in there. We wick into it. We wick into it. We wick into it. But the bodies aren't even closing inside of that. You know what that is. You know what that is, baby. Rallied up. We trade down. Another one. Rallied up. Trade down. Another one. And then finally, the low-hanging fruit. That's the propulsion here. This is the first shift in state delivery. This is the propulsion. Okay? I think that's how you spell it. I think so. Okay? So I'll leave this here for just a second so you guys understand. Drop a 4 into the chat if you understand propulsion. Someone had a question on that in the Discord. I told them, I told you what it was, and I told you I'd go over it on our live session today. So I want to make sure that you get it. Shift in state delivery. And it's either going to have another down candle or it could be 2. We don't have that in this case. Torta, you're fired. We don't have that in this case. We just have the 1. So that is the propulsion entry. Go look at the Discord. Go look at when I entered. It's propulsion model. Now, right after, this is where the fun begins. If you haven't had fun already, this is where the fun begins. Once we got the low-hanging fruit objective, I do not always know. You never really truly know, but that's part of the risk that we take. Right after, immediately after we got the low-hanging fruit, right, the very next minute, 9:48. 28,035 could be a later objective. Now, I did round up because technically the high is 32.75. I didn't feel like doing all that. I just threw in 35. Okay. So there's nothing, otherwise there's nothing specific about 28,035. It's just rounded up. Okay. I was just being lazy. Let's be honest. All right. I didn't want to type all that out. I rounded up. Okay. So I said that could be a later objective. Now, why would I say that? Why would I say that that would be a later objective? Why do you think? Go back to what we already spoke about earlier. In the way that I got stopped out. In the way that I got stopped out. Think about it. What happened? Well, I thought the low was set and we went higher. So we had a low, high, but I got stopped out. So that low, high, lower, low. What manipulates, typically what? Fill in the word chat. You guys know this. What manipulates typically mitigates. Can you even see a mitigation here? Low, high, lower, low. So what is this? What's that right there? Mitigation. These up candles were traded through and then traded into to go lower. That was utilized on the sell side of the curve. So what do you think is going to be utilized? Let me back up. This was utilized on the left side of the curve, on the sell side of the curve. Which means if this is a buy model, this will be utilized on the right side of the curve or the buy side of the curve. Okay. So that means if that is our manipulation low, right? And this is our low risk buy, this is our first leg or still part of the first leg. What do you think is going to occur here? Mind you, if we haven't traded through this yet, you don't know. You don't know. This is 9:41 where I stopped the chart right here. You don't know. But yes, that's a mitigation. Where does price happen to go to? On the right side of the curve. Where are those bodies stopping? That's pretty cool. And obviously 100% random. Obviously. First leg, second leg. I didn't partial slowly. I walked a dog. I bought it here, sold it up there. No partial. No partial, my friend. If anything, I, believe it or not, I actually wrote in my journal, no kidding, I wrote in my journal, I'm actually going to add on later. I chose not to. If I would have, it would have been that. But I decided not to. I said, no, you're good. You just leave it where it's at. You got the low risk buy. You didn't get it right the first time, but you got it right the second time. So just let that one go. You can do a late stage add-on but the late stage really didn't offer a lot. Like this imbalance here, I probably would have considered that, but this should have been the add-on that could have been but wasn't. So even though I told myself I would add on, I actually chose not to. So that may or may not be a trading mistake. I don't know specifically, but wow, Adam. Jesus. Adam's going to church on Sunday. No, it's not a wide stop, Adam. If you were to trade this or add on here, your stop could go to the low end of the mitigation or to the low risk buy. I'm disappointed, but I'm not surprised. Disappointed, but not surprised. So, Jesse asked about mitigation. So, I actually have multiple videos on mitigation and the function of a mitigation. The reason that it is called a mitigation, and again, I did not name it that. I was taught this. But, man, there's so much going on. It comes back to this idea, and again, this is where people don't agree with me, but this is my YouTube, and you're here because you want to be. It comes all the way back, believe it or not, Jesse, it comes all the way back to the idea that the markets are not free. There is no supply and demand. There is no buying pressure, selling pressure. There is no support or resistance. That does not exist. Okay? In my humble opinion, it is ran by an algorithm. There is manual manipulation. Yes. They can literally turn the Chicago Board of Exchange off like a light switch. Like your bathroom light switch. So, the amount of control in the marketplace is astronomically high. And that goes against what most people believe. And that's fine. You can believe whatever you'd like. You want to believe in supply and demand, go for it. But the idea, okay, of a mitigation is not for us, it's not for you, for me. It's for smart money. It's for the interbank traders, okay? Interbank traders, those are the real smart money traders. It's not who JP Morgan and Citibank and Citigroup and Wells Fargo and all of them. They're not smart money. The interbank traders are smart money. And again, I won't go too much into that, but there it is. The buy model and sell model. Let's come back to this for a second. The buy model, okay? This, do you know why this works so well? Because the market's designed to do this. That's why it does this. It does 7 stages back to back to back. And it does this for sell model as well. Now, if you just think about that logic for a second, Jesse. Yeah, IPTA, if you know, you know. The interbank price silver algorithm. That's ICT's name for it. Yes. I just call it the algorithm because he overcomplicates everything and overlabels everything too. But I still have to give him his props. I did learn a lot from him. But anyway, moving on. Think about this for a second. In the real world, like Walmart, you know, grocery stores, even actual real commodities like oil as an example. Yes, there is some level of supply and demand when it comes to real commodities like oil. There's oil production, or they reduce production. You know, we have summertime, people drive more, or we have the pandemic where people don't drive as much. So the actual supply and demand of real commodities gets screwed up. So yeah, that is real. corn, wheat, soybeans, you know, stuff like that, like actual tangible thing. This is a mouse, but like tangible things, there is a real supply and demand factor to that. Yes. Yes. Now, in the real world, right? You can sell something, but you can only sell something for how much another person is willing to buy it for. I could sell my Corvette today. I won't sell it, but I could if I wanted to. Now, if I priced it a little bit higher than the market price, it might take longer to sell it, because why would somebody want to pay more for it than they should? So it's only going to sell for what another buyer is actually willing to pay for it. Okay? And that's why you see, like when there's competition, multiple grocery stores, prices usually come down because they try to undercut each other. That's real. In the world of finance, that does not exist. Okay? I can put a buy order in. I can put a buy limit here. The market can hit my buy limit and trade higher. And me actually not get filled. Okay? Or get filled on a partial order or something like that. Put in 5 contracts, get filled 3. Something like that. Okay? Fundamentally speaking, if the market were truly free, if it was truly supply and demand, if it was truly controlled by buyers and sellers, then things would be random and they'd be chaotic. There would not be, I guess there would be some patterns, sure, for the sake of patterns, but there would not be 7 easily identifiable, perfectly in a row stages. Like, think about that for a second. What are the probabilities that in a 100% random market, 7 stages would occur in a row consecutively? Now, you don't have to be a statistics major or a business major or a math major to understand that that's impossible. That is statistically impossible to see equal highs be formed, then distribution, then redistribution, then manipulation, then a low risk buy, then a first leg, and then a second leg accumulation to the original consolidation. There are 7 stages in a row. Okay? What are the chances of flipping a coin heads 7 times in a row? I don't know. We could ask ChatGPT. Give me a second. I'm going to see if it does it. Okay. The probability of landing heads exactly 7 times in a row on 7 consecutive flips is 1 in 128, which equates to a decimal of 0.007825, or a 0.78 chance. You have a less than a 1% chance. That means in order for a market maker model to pan out, there's only a 0.78% chance if the market was truly random. Do you guys, like, in all seriousness, like, no BSing around. I haven't cussed today. I'm actually pretty proud, but we're going to see if we can keep it going. Seriously, think about that for a second. If you did a coin flip, the chances of getting 7 in a row, you have a less than 1% chance. But yet the market seems to do, whoops. How many times have you been on my YouTube channel? How many trades have you seen me take? How many calls have you seen me call out for you? How many times have you seen this phenomenon? Whether it's the buy side or the sell model. This is not a 1% chance. That makes absolutely no sense. This is not a free market. It is controlled. You get the equal highs. You get, we leave it, back into it, leave it again. We stay bearish until manipulation. It stays bearish until manipulation. How on earth could this continue to be true every single week in a random market? It doesn't make sense. The math is not mathing. The math doesn't equate. Right, G, right. If the market was not controlled, I'd fall on my face. I'd say 28,035 could be a later objective, and then we would just trade immediately lower and make a new low of day. But yet you don't see that. I said 20,035 could be a later objective. Then we come down for the mitigation. Then we get 20,035. How can somebody like me at 9:48 in the morning tell you the future price of a index futures contract ahead of time if this was a random market? Go look at my other tweets. I don't delete them. It's been a while since I've tweeted. It's been months. And then I just come out of the woodwork and hit a banger like this. And you really think this is random? How much evidence do you need to see? So coming back, Jesse, I know I've been talking to Jesse this whole time, but I say all that to say, if you do not understand what I just told you, if you do not understand that this is a highly controlled, because we still got tweets to go over. This is going to be a long stream. Strap in. There are 7 stages here. And the mitigation is one of the stages, okay? This entire thing here, this market maker buy model, is a hedging program for smart money. That's why I said earlier, it's not for you, it's not for me. We're not even supposed to be here. But we are. And we're not even supposed to know this stuff. But we do. Smart money is allowed to buy and sell all day long. They can buy, sell, buy, sell, buy, sell, buy, sell. They have high frequency algorithms. Buy, sell, buy, sell, buy, sell. Blah, 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 blah. You and I, most retail traders, if not all retail traders, do not have the luxury of being able to do that. Why? In the nature of trading futures and Forex and whatever else that is leveraged, our accounts can only take so much, right? Whereas smart money, okay, they have access to money that most people won't even believe exists. Like, it's unfathomable how much money they have access to. They can take the drawdown, bro. You can't. I can't. Retail traders can't. Even some banks can't. You saw what happened to the Lehman Brothers in 2008. You get over leveraged, you're done. The mitigation, okay, the reason this works is because this is a tool that allows smart money to exit their shorts that would otherwise be underwater or soon to be unprofitable because of the future run to the original consolidation. Thank you, G. I appreciate that. Short. Uh-oh. This crossing of 50%, that's an indication. I used to say this a lot. The crossing of 50% is a neon sign. Imagine you're driving at night. You're on a night drive and you see a neon sign and it's flashing. Bing, 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 bing. Right? Like at the casino or something. Or it's like a McDonald's sign or a Buc-ee's sign. And it's it's blinking. Your eye goes right to it because it's nighttime and it's a flashing neon light. And it's obvious. That's your sign. Oh, Buc-ee's next exit. We'll go get some, beaver snacks or whatever and a coffee. The crossing of 50% is that neon sign for smart money to mitigate their orders, to exit shorts before the run higher, and or add long positions. Exit shorts and or add longs. Okay? That's why that works so well. That's why it's called a mitigation. Price is not mitigating. That doesn't even make sense. Price is hitting a mitigation in order for smart money to exit shorts before the move higher. That's why mitigation works so well. That's why my mitigation model will slap the piss out of most models out there. because that's what it's based off. That is what it's based on. It's the only difference is my mitigation model requires that you have to have an imbalance as part of it, because now it's doubly algorithmic. It's algorithmic because it's trading into the mitigation, but it's also algorithmic because it's trading into an imbalance. So it's otherwise creating a balanced price range before it goes higher, because the market, it will have imbalances, but the market generally seeks efficiency. So it trades to inefficiencies and then trades to liquidity. That's one of the 4 ways that price moves. Go watch the 48 Laws of Trading video, or go look at the 48 Laws of Trading post. All this stuff is public. All this stuff is information you already know. Okay? So that's probably the longest question. I've never really spent like 20 minutes on a single question before, but Jesse, you basically just got a mini course or a mini masterclass on mitigation and why it works. But you will not understand it if you believe this is a free market, because it won't make sense. The logic will be missing. This works because it's coded to do this. That's why I can tell you stuff like this. And the tweet on the chart tells you when I set it. And I set it in here. A later objective. Not right now. You don't want to buy it on the way up. I'm telling you ahead of time. We go a little bit higher, then the mitigation. And then guess what? Primary versus secondary entries. The primary entry could be the mitigation. You could trade that if you'd like. And then we get a shift in the state of delivery here, even though there's a massive wick right there. And then 10-12, it closes outside of it. This candle a little bit lower. And then what's this candle doing at 10-15? What's that doing? Oh, I don't know, John. That's not anything special. You're an idiot. You're an idiot. There's an imbalance right there. That is algorithmic. Yeah, good enough for government work. Okay. So you have manipulation, low risk buy, first leg, second leg. You can trade below the old lows as basically a turtle soup. So you could have this kind of as a turtle soup, propulsion, kind of basically another propulsion, imbalance model, mitigation model, primary entry, secondary entry. I told you earlier, just like I told you last year, and I think maybe the year before that. I've been doing this a long time, and I don't remember everything. In a market maker buy model or a sell model, every entry model that you know of will present itself. Unless it's a 1 stage, then yeah, that'll probably miss. But if it's a classic 2 stage, every model will pan out. Every single entry model. All of them. Okay? So that should give you some confidence. I'm just trying to see one more thing here. The 1 minute is kind of janky. The 2 minute does offer an imbalance here. And the 1, 2, 3 formation with that imbalance makes that the Judas model. My Judas model. So the Judas model is there. The Y-Slime model is there. The low risk buy is there. The propulsion is there. The mitigation is there. The primary and secondary entries are there. All of it's there. Everything is there. So think about that for a second. Everything is there for you. Even the C8 logo, I'm not going to include that, but it's there. Just for, for the sake of being funny. But this is why I do stuff like this. Not to show off. I mean, that's a perk, okay? A little bit. I can't say I don't do it for that, but it's a very small smidgen, okay? The main point, okay, is to understand you can put these tweets on your chart. All right, you can put those tweets on your chart. And then guess what? Bro, there are more. That is not the only one. The later objective, okay, there's one. I shared this later in the move. We got a couple more on here. Okay. Obviously way later in the move. But I said, if 28,000, remember earlier, don't skip this. Remember earlier I said this stuff is binary. If this, then that. If not this, then that. Remember ES didn't take Thursday's low. So if it's not going to take Thursday's low, but still go for those highs, NQ will follow suit. Go look at the Discord. It's all prior. That's all foresight. That ain't reacting, folks. That's predicting. Yeah. It's cool stuff, I know. And this is the stuff that you're going to learn how to do too. If 20,035, then might as well take London high too. And London high is just right above that. Because that would be the next objective. Above equal highs. Do we have an imbalance above equal highs? Nope. But we do have London's high. And that's at 52. Right? Then we do get London's, or no, excuse me, sorry. We get 35. The 28,035 is here. As soon as we got that, like a minute, because it took me a couple seconds to type it up. Bang. Magic 8 ball going bonkers. And then the last one was London. Let me put this down here. The last one was actually taking London's high. I might have been a couple minutes late on that one. But there it is. Are you guys enjoying the stream so far? That's why I put that in there. You guys enjoying the stream so far? Drop a 5. We're not done. I might go a little bit over today. It's okay. I do this for free. I don't have to leave. It doesn't even have to be an hour. I can make it 30 minutes. I don't care. I do what I want. I'm a free man. So all in all, and I put the chart with the tweets, but not the markups out on social media, so everybody can see that your boy still got it. As if I ever lost it. But all the tweets are on here, right? And now you're able to see everything. Do you guys get that? You are able to see everything. Look at it. How many indicators have I showed you today? Huh? How many volume and MACD and whatever this and whatever that? How many of that have I showed you today? All those indicators, right? Okay, well, where's the precision then? That was precise. The propulsion was pretty precise. My first loss, no, that wasn't precise. I got it wrong, chat. I got it wrong. But after that, the precision was there. And out of this entire move, that's what, 90, did I catch 90% of that? 85, 90% of that? Yeah. Elite stuff. And you are learning to do the same. Do you guys get that? You are learning to do the same. Let's go over this one more time. Original consolidation, distribution, redistribution, that becomes accumulation on the buy side of the curve. But you will not get accumulation and reaccumulation until after manipulation. Okay? Equal highs, distribution, redistribution, manipulation. Equal highs, leave it, back into it, leave it again. Bearish until manipulation. Distribution, redistribution, manipulation. Manipulation lowers by first leg, mitigation second leg. But remember, there's only a 1% chance, less than 1% chance for this to occur if it's a free market. Oh man, John, so you're telling me we'd have a 0.7% win rate? Well, I don't know if you could be profitable with a 0.7% win rate, brother. If you lost 99 times out of 100, you're going to have a higher than a 1 to 100 RR for that. Good luck. And Torty, I'm not sure, brother. In all seriousness, I don't know. I only looked for today to the extent of those highs, actually London's high, and that was it. So I didn't hold for that. I'm not even, holding one for, overnight or anything like that. That was it. I'm not sure about the higher time frame. I don't know. I wish I could answer every single question and be right 100% of the time, but I can't. You know what? That's a good question. Slowly. And so let me circle back to what I said earlier. Let me just delete some of this stuff because we're kind of cluttered in here, but I don't need that. Let me come back to what I was showing you earlier. I meant to put this in here and I forgot. So remember, earlier was something like this, right? I was looking for the 1 to 5 or something like that, whatever. And that got clapped, right? And the re-entry, you'd have to double check. I don't think it was right at the propulsion. I think it was a little bit higher, to be fair. I think it was a little bit higher. But there it is. Something like that. Or something very close to that. A little over a 1 to 4. About a little over a 1 to 4, we'll say. So there you go. The risk was not exactly 1%. So it would be hard to tell based off of just the RR tool alone. But this is what it looks like. So to keep it simple for explanation purposes, just imagine for a second that, okay, if this was a 1% loss and this was a 1 to 4.5, but we'll just round down for being realistic, this should be a 1% loss and this should be a 4% gain. Maybe add like 1 or 2 ticks, for commission or whatever, and then that's it. So even though this was 1 and 1, right, 50% win rate, the win, okay, if you want to make it in this stuff, your wins have to be larger than your losses. That's basic money management. Basic money management. Small risk, large reward. So when you're wrong, you can be wrong a little bit. Ego might take a little hit. I lost. Right? Get over yourself. And then still, small risk, large reward. So the mistake I made today was I thought this was manipulation, and it wasn't. So I got in too early, and then I re-entered. And the re-entry is what, makes this stuff worth it. Okay? Thank you, Slowly. Well, this one wasn't a banger. That was a loss. But the second one was absolutely disgusting. And that's the elite stuff that we look to do. You know what I mean? So up to this point, do you guys have any further questions? I know we covered a lot of stuff. We covered RR. We covered market maker models, but the buy model more specifically. We covered that. We covered the function of a mitigation. This is bothering me. Hold on. There we go. That looks a lot better. We covered primary and secondary entries. We covered all the stages. Low risk manipulation, low risk buy, first leg, second leg. Yeah. We covered a lot of stuff today. So if you guys are good to go, we can shut it down here. But I wanted to make sure that we covered a lot of stuff. Maybe something was new. Maybe something wasn't. But you want elite level precision, you're going to have to take some elite level notes and elite level studying and elite level experience. Period. Great question, Gavin. So Gavin asked, would you define your trading personality something like passive when it comes to wanting to put risk on only the highest probability MMXM trades 2 to 3 times per week? Yeah, pretty much. Pretty much. That to me, and again, everybody's different. Okay. You might be the kind of person that wakes up, you know, at 7 a.m. and you're fully awake by equities open and you want to scalp, you want to take 10 trades a day or whatever. I don't have an issue with that, bro. It's your account, it's your trading, it's your career. You do whatever you like. Me personally, I like stuff like this. Now, I don't always trade the low risk buy if I sleep in. I was awake today. I've been trying to work on that. But if I had slept in, I probably would have taken the mitigation or like a secondary entry in here. Or maybe even I would have taken the shift in the stay delivery and not got filled. And then I would have just missed out. I mean, that could have been a possibility too. But after doing this for a very, very long time, yeah, I would say that style, Gavin, is really good for me. I'm 32, bro. I'm about to be 33 years old. Okay? I'm getting old, fam. I'm getting old. All right? When you understand that sometimes less can be more, right? Quality setups, not quantity of setups. This right here is textbook definition of quality over quantity. Literally. The second one, not the first one. First one was trash. The second one, yes. That is quality, not quantity. It wasn't like trying to buy this low and then getting stopped out and then trying to buy it again and then getting stopped out and then buying it and then going break even and then re-entering here and all that stuff. Brother, know what stage you're at. Trade that stage. Stop loss at the previous stage if you'd like. Add on if you want to, or don't. Be patient enough for the equal highs. Be patient enough for the next session high if there is one, or the next imbalance if there is one. Patience is hard, especially when you see, you know, like a new high here. You know, if you're in from that and you see a new high here, that looks pretty juicy. A low 1 to 2.5. That looks pretty juicy. And you might think, oh, well, I'll take it. I'd rather just take it. I don't know if the highs are going to be taken, even though this is part of the second leg of accumulation. You goober. But you may not know. And you may end up getting out before you should. And it's a trading mistake, but guess what? We all make them, bro. You don't get to a very, very high level in trading without making mistakes. You don't get to the high level of anything without making mistakes, bro. Nothing. Okay? You don't get to the Corvette without first driving the Cadillacs and the Geo Prisms, and I think I had an Oldsmobile at one point. You know, I had an Oldsmobile, dog. You don't go straight for the nice car. You gotta work your way up, man. You gotta drive the buckets first. All right. For a series of trades, what's a good sample size? Well, number one, I think it depends on what type of trade, because you could have a sample size of 50 low risk buys, but if you have a sample size, let's say 50 trades, but 10 of them are low risk buys, 10 of them are mitigations, and 30 of them are the second leg of accumulation or distribution, well, your data is muddied because it's not the same type of trade every time. So it depends. But to be simple, if you are taking one type of trade, let's just say at the low risk buy every time, then I'd say a sample size of at least 50 is pretty good. But at 2 to 3 trades per week, to get to 50 trades, that's going to take you, what, 15 to 25 weeks, roughly? I don't know what the math is on that, but there's going to be a few months. Like 6 months, probably. What sample size did the Godfather suggest? You should know this when they're trading in his own. I don't remember what Mark Douglas said. Was it like 100? Because I really don't remember. I read I read more books than all of you. So I don't specifically remember what it was. 100, dude. I can't miss yet. I can't miss yet. Oh, Cameron says 20. Maybe it's 20 then. No, I do miss though. And that's why, again, I wanted to show you that. I know I show a lot of wins. I don't show you all the wins. And I know I don't talk about losses all the time either. But yes, that's the reality of it. You win some, you lose some. But as long as you can lose a little bit and make a lot when you win, either like this or something like that, those make up for these bigly. So, all right. Well, hopefully you guys learned something. I won't be tweeting all the time. I won't be tweeting every day. But when something is pretty... This wasn't the cleanest buy model, by the way. But when something is there, I'll tweet sometimes. But you don't need a lot, honestly. Like 3 to 5 really, really good examples, and you will easily have enough to take it and run with it. I was not given the things that I'm giving you. Remember, I was given the basic elementary hot dog water, okay? I was not given the details like I'm giving you. You're getting a lot of self-discovery from me. For free, I might add. I've given you way more than you need. If you, I think it was in Monk who sold his Ferrari, but in other stories, you've heard about the guy who had the cup, and then the guy was filling up his cup with tea or water, and then eventually it overflowed, and he kept going, and he's like, bro, you're filling up my cup right now, like it's overflowing. And the whole thing is like, yeah, you can't learn more until you empty your cup, right? I've obviously learned a lot, and you have too. But you only need 3, 4, 5 examples tops, enough to say, okay, I get it now. I get manipulation. I get low risk buy, first leg, second leg. And I get that there's opportunities at every stage. That's why I can trade every stage. I've been doing this a long time. Doesn't mean I trade every stage. My favorite stage, obviously, is second leg, second stage. Continuations, basically. The continuation is so easy. It's so why do you think I can tweet back here? We might go for those. Because now we've already crossed 50%. So what's after the first leg? The second leg. Second leg's coming up. Strap in. Put your seatbelt on. That's my favorite. Even though our R might not be as high, the moves aren't going to be as large, but the probabilities on the second leg are just scrumptious. But today, I told myself, this is the last thing I'll say. I told myself Sunday night, I'm like, all right, John, you got to start getting up, man. You got to start getting up. And yeah, I might have sleep apnea. I might wake up 12 times a night. But you know what? I'm going to make it work. So, and then this is what you get. Low risk buy. But everything is tradable. Everything after manipulation is tradable. That's tradable. Propulsion's tradable. This is tradable. The mitigation's tradable. And even that imbalance is tradable. There's like 7 models in here. The inversion is another. There's like 8 models in here. Pick one. Doesn't matter. Whatever fits your personality. And you just go with it. And you're trading in the direction of opposing liquidity. All right? So with that, I feel like that's enough. I feel like I gave you a machine gun today of stuff. But drop a 6 if you liked it today. Drop a 6 if you got value, man. Just let me know. You don't even have to like the stream. Just drop a 6. Let me know. Actually, yeah, drop a like if you're not in the chat. If you got value. I may not always be the best at explaining everything. I don't have a lot of notes in front of me. I freestyle these streams. I go off of the questions that you ask. And I do I have a general outline for what I want to talk about. But in between all that stuff, you know, I'm really here to answer your questions. You know what I mean? So whatever it is. Okay? I mean, try to keep it trading related, but you know, you guys can ask whatever you want. And these are the details that matter. So with that, y'all be good, be blessed. Again, you can follow my Twitter, or you can go in the Discord. The tweets are there, and you can put my tweets on your chart, and you can see exactly what it was that I was seeing when I saw it, and even beforehand. Okay? So y'all be good, man. Be blessed. We'll be here tomorrow on Wednesday the 29th. I will put out a market review later this evening for the members here. And yeah, so be good. I'll see you tomorrow.